Fellow savvy investors of real estate investment trusts, the last 2 weeks of tumultuous market drama in real estate investment trusts probably is coming to an end, ladies and gentlemen. Now, essentially, the last 2 weeks you may ask and sit back, why the huge volatility? But exactly what we pointed out in our GCP Global last investment class in March, we were preparing our investors for two things. One is the fact that, as you can see from the chart, this is the VIX. Now, the VIX 2 weeks ago was at 13th. As of end of last week, it shot all the way up to almost 21. That's almost a 50% jump. Now, as you know, ladies and gentlemen, the VIX stands for the volatility index that's traded on the CBOE exchange. It's an indication of basically the options pricing using the Black-Scholes formula. Now, for more in-depth, of course, on that, please refer to our past investment classes and our videos. Now, essentially, we were preparing our investors at GCP Global, which actually count many of the high net worth individuals, as well as family offices and index fund managers of REITs. Now, essentially, when the VIX shoot up so fast, so quick, in so sharp a manner, it will create undue volatility. And in this case, the volatility is downwards for real estate investment trusts. As in this next chart that we've shown in our class, is the fact that the 10-year bond yield in the US actually shot up from a low of 3.8% at the end of last year, steadily to 4.3%. That's in our last class in March itself. And then in the last 2 weeks itself, actually went up to as high as 4.65%. Now that continues to create a havoc on volatility. Now you may ask, and essentially ask whether this was actually anticipated. In fact, the answer is yes, because in our class, we actually pointed out to our class participants, as we have seen here in our past lecture notes that was presented on 23rd of March class, is that we were actually trending downwards for real estate investment trusts. As you can see, this is the FTSE Real Estate Index fund index, and you can see that they were doing steadily down. In fact, we actually presupposed that essentially the lows of October last year could be retested at the 6 trillion level. And true enough, ladies and gentlemen, it went exactly to 6 trillion on this week, beginning of this week. So you can see, ladies and gentlemen, we were prescient in that. Now, why were we able to do that? It's because we were actually very scientific in our analysis. And one of the key things that we pointed out was the triple expiry options for the various options plans in the US, which is what we call triple witching hour, coming at the end of this the month in March, going into April. And you can see, ladies and gentlemen, that has come to an end. Now that essentially prices the prices of options, futures, and stocks, and that creates undue volatility as fund managers actually does what we call laddering, does what we call spreading effect, and actually hedge out their positions. Now, if anything, ladies and gentlemen, the comforting thing is that we reckon that there's only very minimal amount of selling left to be done, what we call systematic selling, as the 10-year bond will actually be done. Now, we reckon that it's time to actually get back into real estate investment trusts. As we can see in our last month's video, why are REITs so bad? We are told to stay out of the REIT market in the last 1 month. In this video, we actually have a change in mind because we reckon that the event that we have anticipated and foreseen for you in our class, as well as in our YouTube video, has come through. Now, this selling has dissipated. Now, if anything, we are entering the corporate seasons of the real estate investment trust. And when I was interviewed on Monday, 15th of April 2004, by Business Times, I mentioned that I expect there will only be lackadaisical, underperforming results so far. And you can see so far the companies have reported, for example, like Mapletree PAC, the likes of come in just flat or below. Now, so if anything, the corporate results will not be exciting. And that's basically as well as quoted in the press. It says, veteran REIT investor and chairman of GCP Global, Gabriel Yap noted that performance of the sector in the first Q would likely be similar to previous quarter and remain lackadaisical, weighed down by higher interest costs on higher or same gearing level. Now, on the second page of that same interview, I've mentioned that, and was quoted that GCP Global Yap says that he will be watching out for valuations of overseas assets and the impact of higher cap rates, particularly on the foreign REITs, for example, the likes of Elite Commercial, Sasseur Reit, not to mention, of course, the three US Office Reits, and a few others. He's also eyeing and keeping an eye for the performance of Fraser's and Core Trust as to whether the incremental distribution income is able to offset the dilution from the issuance of additional shares to finance the stake at next. And of course, for each of the REITs, for example, like Fraser's in Logistics, Mapletree Logistics Trust, as well as Mapletree Industrial Trust, they have actually specific factors to be watching out for, which we have mentioned in our class. So, as usual, hope you liked this week's video. Short, to the point, but essentially what we are telling you and sharing you with this message is that you have been hovering and cluttering in the last 2 weeks. We reckon that it's over. That selling, well, if you attended our classes, and you have been forewarned, you would have acted and stayed up the market. In fact, if you can, you could have shorted the market then debt. And well, now things are likely to turn because we reckon that the option selling is done. So to more, do join us for our next class. But of course, our next class is only on 29th of June, as you can sign over here, or follow us in our weekly video. Cheers.